How's it going, fellow traders? Magic Trader here, and this is the CFTC report for April 7th, 2020. Here is a brief snapshot of the positions held by the institutions as of that date. And so let's take a look at what we have here with gold. So gold, profit taking since February 18. They were at 408,000, which was record highs for long positions, and they've been slowly decreasing their long positions ever since. Quite a significant amount, 408 down to 279. Now, as this latest piece of data was coming out, we see price was consolidating, and it has since gone up just a little bit higher. So you got to be careful with this move here, because what they're doing is focusing on taking profits on long positions. And as that's taking place, price is moving to the upside. So got to be careful, because they're not accumulating a position which is causing this move up. They're removing their long positions. At the same time, we look at shorts, they're very much cooled off, and we were expecting that. When they focus on taking profits, they don't typically focus on accumulating a short position. So you look at the dynamics of the chart, and it is supporting a move to the upside. So we're being very careful to engage this, but I just want to focus on this here. Longs are taking profit. Not a good time to be accumulating a long position on gold, even though it is moving to the upside. So we'll continue to monitor gold and see how this plays out. Alright, now we got oil. What do we see with oil? Price drops into an area of demand, and they are increasing longs. 624,000 up to 655,000. Now, they did jump up shorts from 142 to 189, but that was causing price to drop down into demand, and now we see they have since closed off. So, looking pretty good. A lot of talk about oil right now. Trump just closed the deal right now with OPEC, and we're down here in demand. Everything's looking good for a push up like that. Okay, now we take a look at the dollar. This one's a bit of a mystery, because if we take a look here, shorts and longs are both cooled off. They're not really doing anything. If you look at the coloration of the cells, yes, slightly bullish, but this is a messy chart. Okay, price is still stuck in between supply and demand, so we're waiting for an additional signal to come in here to dictate what direction price is going to go, because we're not really seeing here any signs of what is going to take place with price. Okay, we look at the Aussie, and Aussie was record numbers, 116. They closed those short positions as price was declining here, and now we are responding to demand, and we see the push to the upside. So as price is pushing up, what do we see here? We see a slight increase in shorts and a decrease in longs. So longs are cooled off, profit taking on shorts, and they added a little bit here as price was dropping. Makes complete sense. We look at the coloration of the cells here. They're telling us that there is a bias to the short side, and coloration here still red. There's still a short bias on here. Alright, now we move over to the USDCAD. What do we see? Price was declining from supply, which is what we were talking about. Take a look at that. Buy the pip, and then the drop. And so we look at shorts, very cooled off, and we look at longs, not extremely bullish. But if we look at the sentiment, we can see that it's green, so bullish, and we look at the net positions, they are in the positive, so that all points to a sign of a move to the upside coming. Now we look at the Swiss franc, and we see longs are cooled off, shorts pretty much not doing much of anything. Sentiment is bearish at this time, and net positions in the bearish territory. So very difficult, this chart, because of the dynamics of the chart. No trends, nothing here to dictate where price is going to go, and the positions are nothing strong. So we are staying away from this chart. Euro US dollar, this one's another tricky one, because we look at the charts, we're stuck in between supply and demand, just like the dollar. We take a look here. You know, you got to pay attention to this. Back in February, short positions were at a record 271,000. Now we're at 81,000. That's a massive decline. Okay, a massive decline of short positions. Okay, we went from a negative 114,000 net positions to now a positive 79,000. So does that mean price is going to start heading up like that? Who knows? It could potentially mean that. I mean, if you take a look at the dynamics of the chart, we could definitely see a move like this. But after these massive moves like this, spurred on by the rates being cut, this is not something I want to be putting market orders into. Okay, so I'm going to sit on the sidelines for now. But we take a look at the positions here. They are bullish. Sentiment is bullish. You can't ignore that. It's definitely bullish. Okay, now we go on to the pound US dollar, and we look at both longs and shorts being very cooled off, not telling us much. Look at net positions. You know, it's you know, slightly favors bullishness, but you know, there's nothing strong here. We could definitely see a rally in price form here, but the positions are not really dictating any type of move at this point. And then we have the US dollar Japanese yen. Longs are very cooled off. Shorts are somewhat aggressive. There is a bearish bias and net positions are in the negative. So what's going to happen with price? We are stuck between a descending trend line and demand. So not much to see here. Bearishness, yes, we could potentially see a little drop like this in price, but we're waiting for a clearer sign on that. Kiwi dollar. Longs are cooled off. Shorts are aggressive, bearish bias, and net positions are in the negative. But if you take a look, demand is in play here, causing price to push up. We could definitely see price move up like this in the coming week. Alright, so that's pretty much it for your April 7, 2020 CFTC report. Happy Easter to everybody. Hope you have a great and safe week, and we will talk to you next time. Take care.